Everyone says just buy the S&P 500. You'll be rich by the time you die. But what if picking stocks could make you richer faster? Today we are recomparing index funds versus individual stocks and showing how they each stack up in real life. Alright, so first things first, what is an index fund? We are going to cover this one quickly because we have a lot to get into. So an index fund is a basket of stocks that tracks an index, which is basically a way of measuring the performance of a group of investments. The most popular example is probably the S&P 500, which includes 500 of the largest companies in the US. When you invest in an S&P 500 index fund, you're buying a tiny piece of all those 500 companies. This is great because it immediately diversifies your money across hundreds of different businesses. In practice, this means if one company does poorly, it won't affect your overall return as much because you're also invested in all these other companies. Two popular S&P 500 index funds are VOO and FXAIX. They're both good options, but there are slight differences. We made a whole video comparing the two if you want to check that out after this. Now let's move on to stocks. What are individual stocks? Okay, so with individual stocks, instead of buying a little piece of hundreds of companies, you're buying a little piece of just one company. This means the upside is potentially much greater. If you had bought Apple stock 10 years ago, you would be way wealthier than if you just invested in the S&P 500. That said, individual stocks also come with a lot more risk. Not only do you have to pick a company that makes good products and has a solid business model, but you also need to be able to predict how well the stock will perform, which is very difficult to do. Just look at Sears. Nobody could have predicted that the once retail giant would go bankrupt. Investing in individual stocks takes a lot of research. It takes a lot of time. And even then, there's no guarantee that you'll pick a winner. So which one actually builds wealth faster? Let's compare them in a real-world example. So let's say you had $1,000 to invest 10 years ago, and here's how much you'd have now. If you had put that $1,000 into VOO, which tracks the S&P 500, you'd have about $3,000 today. That's pretty good. It's a nice return over 10 years. However, if you had put that same $1,000 into Tesla, you'd have around $20,000 today. That's pretty crazy. It just shows you how much potential there is with individual stocks. Now here's where things get interesting. Let's say instead of investing in Tesla stock, you had invested in the ARKK ETF. This ETF focuses on companies at the forefront of innovation, like Tesla. If you had put $1,000 into ARKK 10 years ago, you wouldn't have nearly as much as you would if you owned Tesla stock. In fact, you'd probably be in the negative. There are a few reasons for this. One is that the ETF has a high fee. It charges 0.73% per year, which really eats into your profits. Another reason is that the stock picks within the ETF weren't that great. Many of the companies that ARK Invest was early on, like First Solar and Tesla, did eventually do well. But some of their other picks like Sears didn't do so well, and that dragged down the overall return. Now let's look at a bad stock. Let's say you had invested in JCPenney 10 years ago. You would have lost a lot of money. In fact, if you had put $1,000 into JCPenney 10 years ago, you would only have about $26 left today. So which is better? Well, it depends. If you're new to investing, index funds are probably a better option. They're easy to buy and sell. And they're very diversified, meaning you're not putting all your eggs in one basket, and they usually have low fees. However, if you're a more confident investor and you have the time and knowledge to back up your research, then individual stocks might be worth looking into. You could potentially earn higher returns, but just be careful and make sure you don't put all your money into one stock. Most successful investors diversify across multiple stocks and also invest in index funds. So it's really not an index funds or individual stocks choice. It should be index funds and individual stocks. All right, comment below. Are you team index or team stock picker? Make sure you subscribe for more real talk from Investors Lab. Until next time, happy investing.